let me put some water on this parade, though, because we have been bullish from an inflows perspective. I want to get to something, Alex, you just said, which is like, did see a lot of bearish sentiment on the ETH ETF. This was an analysis by Andrew Kang, who's a kind of a trader, and he actually threw into question what you were just getting at, Alex, on kind of the inflows, right? And we're talking about, you know, the 14.5 or so billion in Bitcoin ETF inflows, you know, 50 billion AUM. And he says these aren't actually true inflows, guys, because there have been many delta neutral flows that need to be accounted for. So namely basis trade, you sell futures, you buy this you spot ETF and spot rotation. So it's a bit more of like a rotation trader type play, and you can't really count this as a true inflow. And then he goes on further and he says, like, if you take these delta neutral like trades into account, then you actually don't see 15 billion in Bitcoin ETF inflows. You see something closer to 5 billion. And then if you just extrapolate that to Ether, you don't get the 15 billion in inflows at the end of 18 months. You get something like 1.5 billion. So something a lot smaller. And he quantifies that on kind of the inflows estimate. He also has some qualitative bear case, cold water to rain down on this parade that we'll get to first. But can I get your reaction to this kind of inflows calculation? Like maybe these inflows are, you know, exaggerated because there's some other delta neutral trading that's going on in the background. Would you find this case compelling, or do you think that this is a possibility, Alex?
Oh, it definitely is a possibility. And Andrew is one of the, I think, most articulate of these more pessimistic cases that I've read. I'm not sure if he's wrong. I think, look, there were some big hedge funds that reported 13F positions like Millennium and Schoenfeld. And Millennium is a pod shop, right? They're a multi-strategy hedge fund with many teams. My guess is that was pure basis trade, and I think it was $3 billion, right? So he says $4.5 billion was the basis trade. Like that could be right? Because I mean, I see one that I think probably was, although we don't know, but probably was. I would say that, you know, that's still, he speculates there on what you had on the screen a second ago, Ryan, that we don't know if large holders, he named Block One, confirmed, you know, converted their Bitcoin into the ETF. I'm highly skeptical of this. I don't know any large holder that considered this. There's most likely, unless you happen to, I don't know, what was the price, right? You know, we'd have to look at when the inflow occurred, but you'd have to, for it to be tax neutral, you have to take a slight loss or have it be the exact same price. I think most people that are big holders that have been accumulating for a while, this would be a huge capital gains event for them. I don't see anyone needing to do that. I think if you, by the way, accumulated and held a lot of Bitcoin for a long time, all of a sudden it's too hard to store on your hardware wallet or at your custodian, you've got to get into the ETF. Like you were fine for those, you know, 4 years, 5 years, 10 years that you held all that Bitcoin, but gosh darn it, now I've got to take this tax event to just for the ease of going to my fidelity.com account and looking at it there. To me, I don't buy that. I'm not aware of any like evidence of that in size, and it doesn't make sense to me. So that only brings it down to 10 billion in net flows if we accept his basis trade number, first of all, which is still enormous. And I would say, just as a caveat here too, ETH has mostly had a higher funding rate on exchanges than Bitcoin. So you probably see flows from the delta, from the basis trade here too. So hard to place exactly. You know, if we look at like annualized basis, you assume people will be playing that. It's much, you've been doing this trade for years anyway. You don't need the ETFs for that. It just makes it a little easier.
Matt, I'm going to add some more cold water to make it even more challenging for you, my friend.
Right,
so I want you to comment on those inflows in a minute, right? And he says it's delta neutral, recall, and like closer to 1.5 billion than 15. So a lot lower than your estimate. He also gives qualitative reasons why. He said, personally, I believe the expectations of crypto natives are overinflated with respect to the Ethereum ETF and its interest among TradFi allocators. It is natural that those deep in crypto have relatively high mindshare and buy-in on Ethereum, but in reality, the large groups, TradFi, the key portfolio allocators, are not crypto native. They're not interested in buying Ether. He also says that, you know, this whole property of ETH as a cash machine, Well, it's actually not that impressive from a price to sales ratio perspective or a PE ratio perspective, particularly after net issuance and inflation. So if traditional investors are looking at this as kind of like a cash flow PE growth tech stock play, they won't be impressed either. So you got the quantitative net inflows, like it's a bunch of delta neutral stuff, you can't count it. And then you got the qualitative, like TradFi doesn't care. I mean, Bitcoin was the brand name and it came first, right? And now you've got Ethereum and like, how are they going to look at this asset? And the PE ratio is not very impressive relative to other growth tech stocks. What do you make of that?
Yeah, that's a trio of arguments. I'm ready to swat them down.
Yes.
So on the first one, I deducted $10 billion of assumed AUM in the Bitcoin ETFs related to the basis trade and things that I didn't think would appear in ETH. I think it's a question of whether they appear in ETH or not. But my estimate already removed 2x what the basis trade likely is from estimated AUM. And I think the dual mistakes that Andrew are making, and I agree, he's a great analyst. He's assuming the Bitcoin ETF AUM is static and not going to continue to grow, which is an extremely bearish view. And then when you start deducting these blocks of $10 billion, they come right out of the end result. So even small changes one-to-one translate into flows. So you pull that number straight down. So already accounted for, at least in my estimate. And I know Galaxy thought through these issues as well because the basis trade is really well known. So you can see that in my write-up. On the TradFi doesn't care, I do think that's a mid-curve analysis. I will say TradFi's point of view is like, I want to own crypto. I want to be diversified. I think they're not thinking about even things like different use cases or things I wish they thought about ETH and they found it interesting and these platforms, etc. They're just like, oh, I could own 50% of the market. That sounds like a coin flip. Or I could own 72% of the market. That sounds like a better bet. I'm going to own 72% of the market. I don't own one stock. I don't own one bond. I think this diversification narrative is just the dominant narrative for most non-crypto native people. I just want to own this space. So I think he may be sort of overthinking it from a qualitative perspective.
Like they're not doing the discounted cash flow analysis and trying to project MEV and validator income and issuance and all of these things.
No, they're just like, I don't own one stock. Why would I own one crypto? I don't want to own 50% of the one market. I want to own most of the market. I'm just going to diversify. I'm just going to buy both. That's what I hear from advisors day in and day out. On the price to sales stuff, I do love all the analysis that people put out on discounted cash flow models for ETH because it's really fun to look at. And Bitwise has its own analysis, and VanEck has a great analysis, and StoneX has a great analysis. There is an issue with them, which is they're making these assumptions, and as you tweak the assumptions modestly, your outcome changes dramatically. That's why all of these arrive at a price target between $200 and $100,000. And that's like not really super helpful. To me, the value of those price to sales analyses is that they show that eventually this can be a cash flow driven asset. It's like doing a discounted cash flow model on a Series A startup. You end up with such wide variances. What you're looking at is it going after a large addressable market? And is there a reason it would be valuable? And that's what those things show. From my perspective, you can get to very large numbers with certain assumptions or very small numbers with other assumptions. I think they serve their purpose. I think a far better way to think about the price of ETH is that the price today reflects the conditions today and is probably accurate. And we have this huge demand shock coming and no new supply. I think that's a much more accurate reflection of what's going to happen in the price than toggling with discount factors on DCF models to arrive at one price or the other.
Just really quickly on the point about toggling DCF variables, right? TradFi investors did not do that with Bitcoin, right? So they're already trained to just like look at a crypto asset and completely ignore DCF. Not that they should in the scheme of things. I know we have some great cash flowing productive assets in crypto, but like they're not, there's no DCF going on for purchase of Bitcoin.
No, that's correct. And I think with ETH, what they want to know is, oh, this is the platform on which tokenization will take place. This is a platform on which stablecoins will take place. This is a platform on DeFi taking place. BlackRock is launching money market funds built on ETH. This could be, this new platform for how finance works in the world. I want a piece of that. And I think that's basically enough. Remember, this is a small part of their investment portfolio. It's a couple percent. They just need to know that it's going after this huge addressable market, that serious firms are building in the space, that there's massive new demand coming online and no new supply. And that's enough for me.
If you enjoyed all of that, then you'll absolutely love the Bankless newsletter. Join over 300,000 fellow readers, all for free. Click below to sign up.